I won't stop till I hear him say,
Alrighty, what is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. In today's video breakdown, I have a couple of PDFs and fundamentals to go over with you all, showing you all how early we are in this blockchain distributed ledger technology adoption phase, showing you all the massive amounts of money that are about to flood into this market space. Ladies and gentlemen, if you all enjoy video breakdowns like this, make sure that you smash that thumbs up button, subscribe to the YouTube channel, share this video with a friend or a family member, wake them up. It is time. I cannot stress enough the lack of information that is amongst the general public. People are being misled to believe things in this market space. You really need to do your own research, read these PDFs, open these fundamentals, start to do the digging. I'm going to attempt to do that for you in today's video breakdown. So we're going to start with this. I might actually make this a two-part series video, so that way it doesn't, I can actually split it up. I have some other fundamentals and PDFs that I wanted to share with you all, but I'll make a part 2 to this specific video. These numbers that I'm going to share with you today are going to blow your mind, and this is not even scratching the surface with the amount of money that's about to be tokenized onto the blockchain. So it says, and this is from northerntrust.com, by the way. Today, blockchain technology has the potential to transform transactions across the financial services industry. That's something that we've been talking about for quite some time on this YouTube channel. People are just now starting to wake up, helping create new asset classes and enabling the digitization of others. For example, alternative assets, a manual and sometimes a peak asset class, offer a great chance to use distributed ledger technology to create new opportunities, either by digitizing the administration of the investment lifecycle or in the long term, creating fractional shares called tokens of alternative assets, such as real estate. That's a massive one right there. Art, ships, or private equity, making alternative investments more accessible, liquid, and transparent. So what are these assets right here? These are real assets that they're speaking of, okay? Pay attention to detail. The vocabulary says it all. It says right here, one of the biggest challenges facing the alternative asset sector is the sometimes opaque and manual nature of valuations and transactions. There's little standardization, and these markets are among reporting formats, leaving many investors with unreliable data and wide-ranging estimates. The information is sourced from multiple channels, and it's often an exercise in rummaging through thousands of documents to obtain the needed numbers. It's nearly impossible to get a clear view of the valuation exposure and liquidity of alternative investments in a portfolio. Blockchain is about to help revolutionize all of this, okay? Now, pay attention. This is where it's going to start to get interesting. It says the entire alternative asset market has been hindered by the issue that I just announced up here for years, and investors have been seeking greater transparency and efficiency. Using blockchain to automate and streamline processes for alternative assets has the potential to revolutionize the sector. Now we're going to pause right there, because here again in purple I highlighted the entire alternative assets market. That is all the money. If you're not too entirely sure on what real assets are, real assets include some things like precious metals, commodities, real estate, land, equipment, and natural resources, to name a few, right? We also have art, music, things of that nature. But let's just focus, I'm going to blow your mind, on the real estate market. And this is outdated information, so it's most likely grown since this, but this is a number pulled from 2020. The value of the world's real estate reached $326 trillion. Do you understand? The market capitalization for the cryptocurrency space reached 2 trillion, and people cannot believe, okay, it reached $2 trillion in 13 years, right? We're going on 14 years of this asset class right now. $326 trillion alone in real estate. And I'm literally reading a document to you all from northerntrust.com, right? It says the entire alternative assets market. And it mentions real assets, right? Real estate being one of them. And the real estate market in 2020 was $326 trillion. I've read to you all in previous PDFs that institutionalized investors believe that the entire market will be tokenized in the future, right? Wake up, ladies and gentlemen. This is massive, and people are sleeping on this information. So again, like I said, I'm gonna make a part 2 to this video breakdown. I'm gonna read some more PDFs for you all. Let's jump back in. I get super excited reading these numbers because, I mean, it's just, it's mind-blowing, the lack of information out there that people, just aren't readily aware to. So it says right here, recognizing the tremendous potential of distributed ledger technology, Northern Trust pioneered the use of blockchain technology for private equity, which I showed you in a previous PDF from, I believe it was State Street, where they were talking about private equity. They mentioned $131 trillion potentially being tokenized in the future. It says using the technology, they created a new level of flexibility and versatility in managing fund data by applying blockchain to the entire operational workflow of a fund. Every transaction and occurrence, from capital calls to audits to exchanges between GPs and LPs, is automatically captured and encrypted on the blockchain. This capability is a game changer for all parties involved in the private equity lifecycle, right? So I'm going to skip this again to save the length of this video breakdown. We have a little section right here that I'm going to come back to in part 2, where it talks about the carbon markets. We'll come back to that and read some PDFs in part 2 of this video breakdown. But let's focus where it says right here. Okay, it talks about Deloitte. Now I have a Deloitte PDF that we're going to get into the detail on. It says the consensus in the financial services industry is that digital assets are the future, with 76%. That is a lot, okay, of financial services industry senior executives, that's FSI, senior executives and practitioners surveyed in Deloitte's 2021 Global Blockchain Survey saying that digital assets will replace fiat currencies in the next 5 to 10 years. They're not just average everyday individuals saying this, okay, not just YouTubers. They are financial services industry senior executives. Do you understand that? They're the people that run the financial ecosystem behind the scenes. And they are saying, 76% of them saying that digital currencies, digital assets will replace fiat in the next 5 to 10 years, okay? With that being said, all right, with showing you just alone that this document right here is saying the entire alternative assets market, and just a piece of that is valued at $326 trillion in 2020. If that doesn't blow your mind, check this out, okay? We're going to come over here to this Deloitte PDF, where in that previous fundamental, it was mentioning the Deloitte PDF. This is that specific PDF talking about the statistics of FSIs that they interviewed. So it says Deloitte's 2021 Global Blockchain Survey, a new age of digital assets. We come down here and it says, in our 2020 Global Blockchain Survey report, we examine the role and evolution of digital assets and how blockchain-based financial infrastructures could transform banking and financial markets. Our 2021 survey finds that global FSIs, remember FSIs, see digital assets and their underlying blockchain technologies as a strategic priority and now in the near future. In fact, nearly 80% of overall respondents say that digital assets will be somewhat important to their respective industries in the next 24 months. This was taken in 2021. We are now 12 months away from this specific PDF. Another 12 months to go puts us into 2024. It says right here, 24 months, which gives us a timeline, right? More than 3/4 of FSI respondents strongly or somewhat agree that their organizations will lose an opportunity for competitive advantages if they fail to adopt blockchain and digital assets. I've said to you all in previous breakdowns, every single banking infrastructure, every single market participant must adopt blockchain technology, because if one adopts and the other one doesn't, the one that doesn't will fall behind. You understand that, right? Moving forward, that is a massive statement. It says, today, digital assets are disrupting the entire financial market. Indeed, the rise in digital assets is affecting every organization and industry that is a customer of the financial service industry. That is pretty much everyone. It says right here, that is pretty much everyone. Blockchain is driving change in holistic financial ecosystem, from deposit taking to payments, lending, investing, and trading anything of value. Then it goes on to say, the end of physical money as we know it represents an overdue and now inevitable upgrade. There is a consensus among our cohorts that digital assets will replace fiat currencies in the next 5 to 10 years. More than 3/4 of overall respondents and financial service industry respondents, 76%, believe the change will occur. This number then jumps to 94% for financial service industry pioneers, with the growing interest of major institutions and individuals alike. Funds continue to flow into the digital asset market, and in my personal opinion, ladies and gentlemen, it will continue to do so. And I showed you all some interesting numbers just a second ago, okay? Over $300 trillion alone in just real estate, okay? And they're saying that every single financial asset in the future will be tokenized. Do the math. We are early. It goes on to say, nevertheless, banks are standing still. They remain some of the largest patent fillers around digital assets and blockchain technologies. They are exploring ways to harness the power of technology, including how to create new services to address revenue losses from traditional payment services. This requires banks to rethink their business and revenue models around payments. However, this entails more than a process change. As it pertains change to the business model, the revenue model, and fundamental value proposition around cross-border payments and the global money movement. I'd like to pause right there and let you all know that this is something, again, that we've been mentioning for quite some time on the CYPRX YouTube channel, that this change is going to take time. It's not just about buying and selling cryptocurrency assets. It's the entire plumbing behind the financial ecosystem. Every single employee, every single computer, every single piece of paperwork, everything has to be updated, upgraded, and revolutionized over onto the blockchain technology. It is not just going to be an easy flick of the switch process like all of these bullish moonboy hypists out there made it out to be in 2022, where people's portfolios were getting wrecked by not understanding that we are currently in a bear market, right? Now, this is the last part of this PDF that I have that I'd like to mention, and it says approximately 6 in 10 overall survey respondents and 7 in 10 financial service industry pioneers identified regulatory barriers among the biggest obstacles to acceptance of digital assets. Now, that statement plays a big role because we've seen some recent developments. If we come over here to the Daily Huddle, specifically where it says institutions pour capital into Bitcoin at its highest rate since July of last year. And it says digital asset manager CoinShares says large institutional investors are pouring money into Bitcoin. Is it because there are more regulatory things coming into fruition? With that being said, we need to keep in mind that until there is regulatory clarity in this space, and I mean the utmost regulatory clarity, these trillions of dollars that I'm displaying and other researchers out there are displaying to you all in the form of these PDFs is not going to come flooding into this market space until there is clear regulatory guidance. But when there is, I have a firm belief that there is going to be a massive transfer of wealth in this new digital asset class. This fundamental reads, built to make Bitcoin, Ethereum, Litecoin, and Bitcoin Cash a means of payment for state agencies hits New York. Officials in New York are proposing a bill that would make a slew of prominent crypto assets acceptable forms of payment for state agencies. So we are seeing an improvement and a move along when it comes to regulatory clarity. However, it's still uncertain in this market space. And last but not least, I came across this interesting article again from the Daily Huddle. It says Galaxy Digital's Mike Novogratz says institutions waiting for a key indicator to flash before eyeing crypto. And it goes on to read, Mike Novogratz says that the biggest players are waiting for a certain sign from crypto markets before looking to allocating capital to the nascent asset class. In a new interview with Raoul Paul and Real Vision, the crypto veteran says that institutions have mostly done all the due diligence that they need on the space, but they may be waiting for retail traders to jump in first. Crypto needs the retail participants to come back to these communities to buy in, Mike Novogratz said, to believe to drive price, because that's what's going to get institutions back engaged. Institutions intellectually understand this business. They understand blockchain versus Bitcoin versus Ethereum, and they've done all their homework. However, they are gun shy, and it is going to take energy. Energy is price. So with all of these fundamentals and PDFs out of the way, again, make sure that you all are doing your own research. The reason behind creating video breakdowns like this for you all is to really truly get you all to see how early you are on into this asset space, to really get you to drive yourself towards doing research so that way you are not just buying and selling crap tokens, investing in crap NFTs and investing in rug pulls out there. Take it upon yourself to find utility-driven assets, utility-driven projects, do your research on them, analyze your risk properly, make sure that you're not investing money into this space that you're not willing to lose. With that being said, as always, ladies and gentlemen, be cognizant, be aware, and I will see you all in the next YouTube video breakdown. Like I said, I will do a part 2 on this video breakdown, heading back to the carbon markets mentioned in this specific fundamental. As always, see you guys next time.
I won't stop till I hear him say